Hi, we are from Group 9 and today we will talk about PLG Engineering Berhad. PLG Engineering Berhad is a Malaysian company that operates primarily in the construction, environmental management and property development sectors. They have 26 subsidiaries and listed on the main market of Bursa Malaysia with a vision to be progressive and technology-driven global conglomerate by capitalizing their core business while seeking new opportunities to constantly enhance their economic value for their stakeholders. PLB Engineering Berhad, considered a mid to small cap player in Malaysia's construction and property industry with a market capitalization 116.86 million for the year 2024 compared to year 2023, the revenue is 114.64 million ringgit that show increase of 1.64%. And as of June 2025, market capitalization still growing positively 112.40 million. For the year 2024, PLB's main revenue engineering came from construction and property development with additional income from energy, investment, letting, and trading activities, and also solar and waste segments that provided strategic flexibility.
IRDINA ADINI S275 will be presenting how PLB Engineering Berhad applies key Malaysian financial reporting standard MFRS in its financial reporting, especially focusing on non-current assets. First, under MFRS 116, Property, Plant and Equipment (PPE), PLB records assets such as building and machinery at cost. Then they apply straight-line depreciation, reducing the asset value evenly over time. Each year, they also check for impairment, which means reviewing whether the asset has lost its value. Second, MFRS 15, Revenue from Contract with Customer. PLB used the percentage of completion method to recognize revenue from construction contract. Instead of waiting until the end of project, they record the revenue as the work progress. For example, in 2024, they earned 43.6 million from construction activity. They also separate contract asset and contract liability as required by the standard. Third, under the MFRS 138 Intangible Asset, PLB recognized intangible asset like software and license if they are expected to bring future economic benefit. These are amortized over their useful life and reviewed for impairment if they seem to have lost its value. Fourth, MFRS 141, Agriculture is not applicable to PLB. The company does not engage in farming or biological activity, so this standard is not relevant. Fifth, MFRS 140, Investment Property, PLB used the cost model, meaning investment property are recorded in cost minus depreciation and impairment. Even though some property like the one in Sungai Petani were sold at fair value, their accounting policy is to stick with the cost model for reporting. 6. MFRS 137, Provision, Contingent Liability and Contingent Assets. PLB make provisions when future value are expected. For example, they made a 35 million ringgit provision for their waste management operation. They also explain their purpose, timing, and how the amount is calculated as required by MFRS 137. In conclusion, PLB Engineering Berhad applies this MFRS standard properly, especially MFRS 116, 15, and 137, which are most relevant to their construction and infrastructure work. This helps ensure their financial statements are accurate, transparent, and useful for decision making. Thank you.
Hi, my name is MAISARAH. I will be presenting for disclosure of non-current asset for PLB Engineering Berhad based on the 2024 annual report. Non-current assets are long-term assets that are used in the business and not expected to be sold within a year. These include items like land, building, equipment, and investment properties. As at 31st 2024, PLB's total non-current assets stood at 255 million ringgit, a decrease from 276 million ringgit in the previous year. This 21 million ringgit reduction was mainly due to asset disposal and impairment losses. Let's look at the types of non-current asset reported by PLB. First, property and plant equipment, which includes construction equipment, building and operation lands. Second, investment properties, which are held for capital appreciation or rental income. Number 3, asset held for sale, such as the Pulau Burong project. And lastly, intangible asset, which were previously related to PLB Green Solar Sinar Berhad, now divested. Next, in terms of disposal and impairment, PLB sold land in Bukit Mertajam, Junjong and Sungai Petani, generating about 46.85 million ringgit in revenue. And investment property in Sungai Petani was sold for 4.36 million ringgit. Impairment losses were recorded for the Pulau Burong project, 12.81 million ringgit, and the Jelutong project, 2.44 million ringgit, along with a fair value adjustment of 3.91 million ringgit. These assets are measured using the cost model in line with MFRS 116 for property, plant and equipment and MFRS 140 for investment properties. These main assets are recorded at their original cost minus depreciation and impairment. No revaluation is done unless required. The impact on PLB financial was significant. Net tangible asset per share dropped from 0.69 ringgit to 0.57 ringgit, and the company's clearing ratio improved from 2.49 to 1.94, thanks to proceeds from asset sales, which were used to reduce debt. In summary, PLB disclosure of non-current assets reflect a strategic effort to strengthen its financial position while staying compliant with standards like MFRS 116, MFRS 140, MFRS 137, and potentially MFRS 5 for asset held for sale.
Firstly, in inflation and increase in building material costs because the government removed subsidy this year. This made the PLB company has to adjust asset value down. Example in project Pulau Burong, impairment RM 2.81 million plus with fair value adjustment RM 3.91 million. In Jelutong project, impairment RM 2.44 million. Secondly, the economic factor is interest rate. The Malaysia Central Bank keep the state interest rate at 3%. PLB reduced its loan by dispose unused inventory and solar business for RM 33 million for payback bank loan. Lastly, market condition. The property market was low in 2024, so PLB did not launch new project, but they focused on ongoing affordable housing scheme in Paya Terubung, Terdu and Ansu timely complete for the project.
I'll be sharing the analysis of some key financial ratio profile of engineering, focusing on their non-current asset. Let's start with the asset turnover ratio. This ratio tells us how well the company is using its long-term asset to generate revenue. In 2023, the ratio was quite low, only 0.16 times, which is mean for every 1 ringgit of non-current asset, they only make 60 cents in revenue. But in 2024, this improved to 0.53 times, which is a big jump. This shows that PLB is now using its asset more effectively and probably due to mental project, progress and smart decision like selling of unused asset. Next is the non-current asset to total asset ratio. This one shows how much of the company total asset are made up of long-term things like land, building and equipment. In 2023, it was around 58.7%, and in 2040, it dropped a bit to 55.9%. So half of your PLB assets are still long-term, which makes sense because they are in construction and property. It shows they are still heavily invested in infrastructure and long-term projects. And lastly, we have the investment property. This measures how much rental income they are earning from their investment properties. In 2033, the yield was really low, only 0.56%, which probably means this asset were giving much return. But in 2024, the yield increased to 3.44%. That's quite a jump and suggests that PLB they improve rental income or sold off properties that were permanent value. So overall, you can see that PLB made some good move in 2024. Their asset efficiency improved and they are still strong in long-term investment and they are starting to get better return from their properties. That's all from me. Thank you.